Minisode 40 of Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Agha Mirza. Remember, new shows are posted every Monday and Thursday. You can subscribe to our show on iTunes and on YouTube. If you are enjoying the show, please leave a review on iTunes. Now, before I play today's interview, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on our website. Now, in today's podcast, I chatted with Agha Mirza, Managing Director and Global Head of Interest Rate Products at CME Group. I asked Agha to give us an update on the amazing growth of interest rate futures at CME Group and to share details on the newly launched SOFR Futures. I had many questions about SOFR Futures, which stand for Secured Overnight Financing Rate. And I'm someone who believes that you need to learn about your products before you start to trade them. And Agha did a great job explaining to all of us what SOFR Futures are and why CME Group added them as a product. As usual, thank you all for listening, and please enjoy this episode. Agha, welcome back to the show.
Hi, Anthony. Glad to be back, and thank you for inviting me back.
Well, I'm glad to have you back on the show, Agha. You and I always have great conversations when we're talking about interest rate products, and it's always fun for me to hear from you some stats on things that are happening at CME Group with interest rate products. And you've gotten to know me pretty well over the years. You know that I really like to trade the 10-year Ultra and the 5-year. That's my favorite products to trade in interest rates. And I have to say, Agha, this has been probably one of the busiest years that I can remember. I mean, I know we've had a lot of busy years in interest rate products, but this year, I think I've seen some of the busiest days and some of the biggest moves that I could remember in some time. And I don't really watch volume, so I don't know how much the products have grown. I don't know how much more they're trading. I really don't focus on that, but I do feel like there's a lot more activity. So I'm curious, right now, what's the volume like compared to maybe, let's just go back the past 5 years? How much growth are we seeing in interest rate products at CME Group?
Absolutely. Anthony, you are an experienced interest rate trader. As you said, you've traded the 5-year and 10 years, so it's always interesting and exciting to have this conversation with you. This is certainly an exciting time for interest rate products at CME Group. If you look at our current level of activity, in a 5-year time frame, the volumes have essentially doubled depending on where you count it from. Versus 2012, the volumes are well over double, and versus 2013, they are nearly double, running at just under 11 million contracts on a year-to-date basis. Why that is the case? As you know, futures are an efficient product. What that means is that operationally, from margin point of view and relative to bank capital usage for those banks who might use futures, these are efficient products. The regulatory development over last few years have helped to amplify and shine lights on the capital efficiencies of futures. And that's really been one of the drivers, in addition to all the useful product additions and functionality additions that CME has made. Those are some of the drivers why we have an elevated level of activity, or why the marketplace turns to CME for their risk management and hedging needs. When volatility rises related to geopolitical and economic factors, some of which you mentioned, and I can go in more detail. But let me come back to the stats. On May 29th, we had a record day. Interest rates traded 39.6 million contracts in one day, which for comparative purposes are multiple of the 8.2 million contract average daily volume that we had in 2017, which was a record year. We saw 24 million Treasury futures contracts trade. The classic 10-year contract traded essentially 9 million contracts, but we were most excited about the 1.1 million contracts that ultra 10-year Treasury futures contracts traded. You and I have covered that contract a few times on this interview. As you may recall, it is a relatively young contract that was created to help participants trade 10-year point more accurately. And the fact that in just over 2 years since launch, it traded 1.1 million contracts on May 29th, we find that very exciting.
Yeah, I mean, the 10-year Ultra is my favorite product to trade right now. And a quick follow-up in regard to volume. Hearing this growth from you, this growth in volume, is it coming from more participants, or are the bigger customers just trading more because of what's happening in the marketplace?
Combination of both. Most notably, as I mentioned, that in the market environment over last few years, in some areas, potentially rising cost of trading has led our clients and market participants to turn more to futures because they are simply a margin and cost efficient product. That has led to additional participants, particularly end users, or who some may refer to as buy side, to use CME interest rate listed futures and options products in increasing numbers. So yes, definitely there is an increased number of participants, and in fact that is reflected in publicly available statistics. CFTC, the futures regulator, publishes a number of useful stats on futures, and one of that is called large open interest holders. CME's interest rate complex, large open interest holders, has continued to grow over the last 5 years, making a recent high at 2,138 large open interest holders. In addition, I were talking to our clients, we also find that some of the largest long-standing users are using futures more compared to other products.
Yeah, as a trader, I love hearing that the growth in volume is coming from both new participants and the bigger customers are trading more. That's great news for traders. Now, I want to move on and talk about SOFR Futures. I started getting emails a while back with people asking me, Anthony, what are SOFR Futures that CME is adding? Can you share the contract specs with me? And I did. I sent some people to the website to learn more about them. So why did CME launch SOFR Futures, and can you explain to everybody what they are?
Thank you for asking, Anthony. We are very excited to have launched 1 month and 3 month SOFR Futures contracts on May 7th. These are new, what would be called short-term interest rate futures on a new index called Secured Overnight Financing Rate, referred to as, or in short, SOFR. Um, we launched the futures contract based on client demand for a number of reasons. First and foremost, our clients were highly interested in seeing CME launch futures and SOFR. Two, CME has been for a number of years supportive of the industry and regulatory efforts around interest rate benchmarks, in improving and expanding the interest rate benchmarks. And thirdly, and importantly, SOFR is a broad treasury repo rate, which means that it is financially distinct yet correlated to the existing interest rate benchmarks. For example, LIBOR is the underlying contract for Eurodollar futures, and effective Fed funds rate is the underlying contract for Fed fund futures. So the fact that SOFR is financially distinct means that it is additive to the interest rate marketplace, yet it's complementary, and it offers, as we talk a bit more, hopefully I will be able to communicate to our listeners that SOFR offers highly useful risk management, investing, and hedging functions.
Hey everyone, I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. Now, in the past, you and we talked about development of new contracts, and we talked about this specifically with the 10-year Ultra. I remember having this conversation with you and asking you how and why it was started. So it brings me to SOFR Futures now, the development of this contract. Who created SOFR and why did they do it?
So, I will try to summarize what can potentially be a long discussion around the background. But in short, if you think about the existing interest rate short-term indices or benchmarks, and we can momentarily talk about their usefulness, there have been two main types, LIBOR and Fed funds. These have been around for decades, and the market, the futures and the so-called OTC swap markets, as well as use of these indices in real-world applications like loans and floating rate notes, securitized products, mortgages, all of that is extremely developed, and for futures and swaps purposes, what would be referred to as highly liquid markets tied to LIBOR and Fed funds exist. Having said that, these indices have been around for decades now, and as time passes, we all know things change, markets evolved. So relative to the evolved environment over time, the regulators and industry have identified the need for creating a new interest rate reference rate, which is being termed as alternative reference rate. And the idea is for this rate to be firmly based in actual borrowing and lending transactions. So the Federal Reserve of United States convened the Federal Reserve, which is, as you all know, Central Bank of the United States, convened the Alternative Reference Rate Committee, popularly called the ARC, in November 2014. ARC's main objective was to identify and create an alternative interest rate that is firmly based in transactions derived from a robust, meaning a large underlying market, and that that market and the transactions and the way of creating the index should comply with the emerging benchmark regulations and principles, such as the ISO principles. After working on this, the ARC, which is composed of large industry participants and the regulators, in June of 2017, named SOFR as its preferred alternative reference rate. So that is the background on how SOFR came about.
Yeah, very interesting. So, who are the big customers trading SOFR futures, and how do you see this SOFR futures contract growing?
SOFR futures were launched on May 7th, so just about 5 weeks ago. In that short period of time, we have had over 60 participants trade SOFR futures. In fact, since launch, the SOFR futures have traded 45,000 contracts. The average daily volume in notional terms is $5 billion. Again, that's in notional term, which amounts to 1,800 contracts. Open interest has grown steadily to 12,000 contracts. In fact, you may find it interesting that since launch, open interest has grown every day except for 4 days. And today it stands at, as I said, 12,000 contracts, which equates to $41 billion in notional terms. Regarding your question about who is trading it, we have essentially all client types: banks, proprietary trading firms, asset managers, hedge funds, and other client types who have all traded SOFR futures. The interest rate term structure is quoted out to 2020, which is a remarkable achievement. As I mentioned, the ARC essentially identified and created SOFR as an index. It is being published by the Federal Reserve Bank of New York, and the publication started in early April of this year. So for an index that actually started to be published early April, to have a term structure or quotes out to 2020 is pretty remarkable.
Yeah, that's a lot of growth for such a short period of time, like you spoke about. I know that I'm gonna have to pull it up on my machine now. I got to see what the chart looks like on the SOFR futures. Where can people go to read more about SOFR futures? Everybody out there, I just want you to know I will be attaching a PDF in the post so you could read that. But give us a website where people can go to read more about SOFR futures, Agha.
In this. So as I mentioned, CME has been involved with the industry and regulatory benchmark efforts for a number of years, and that CME's SOFR futures contracts are really the first financial product that is helping to develop and popularize SOFR, develop this market. And in that regard, over the last few months and quarters, we have done a lot of research and writing of white papers, as well as communicating and education of the marketplace. So if you go to CME website, SOFR landing page, by visiting www.cmegroup.com/SOFR. So that is /SOFR. You will get to a landing page for SOFR that has a lot of good content available in an organized manner. On the right-hand side, there are a number of useful resources. The link, Anthony, that you will be sharing is a pretty comprehensive but not a very long white paper called What is SOFR? It provides the background that I touched upon on how and why SOFR was created. It gives a description of what is SOFR composed of, essentially treasury overnight repo transactions, which are secure interest rate transactions, the names of the markets that transactions are derived from, information on calculation methodology, information on publication of the rate, the product specification for 1 month and 3 months SOFR futures, product symbols, and so on. So it's a nice one-stop shop. And for those who are interested in additional information, they can browse through the landing page, cmegroup.com/SOFR.
Yeah, I always believe everybody, if you're going to trade a product, learn about the product before you start to trade it. I think that's very important. Agha, thank you again, my friend, for coming on the show, giving us an update on what's going on in interest rates at CME, and of course, giving us great insight on SOFR Futures. And thank you again for coming on Futures Radio Show.
Thank you for inviting me.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.